Hello, I'm Joseph. This video that you are now watching is designed to help you understand how to manage your money. In this video, we're going to cover budgeting, we're going to cover career planning, taxes, retirement plans, checking accounts, credit accounts, and savings accounts. We are hoping that throughout this video you will be able to understand things better so that you will be able to better plan for your future and be financially successful. There's a lot of things that we have to cover, so let's go ahead and get started.
My name is AJ Legrice, and I'm going to talk to you about personal finance. So what is personal finance? It's the process in how we save, spend, and invest our money. So what do we use it for? The main goal to use personal finance for is for financial success. And financial success is determined differently by each person. Some may want to get through life without debt. Some may want to invest. So it can be different for everyone. As long as you have goals for your financial success, it can allow you to have that freedom in your life. One tool that is crucial for financial planning and for financial success is budgeting. Budgeting is how we allocate our money into different areas to ensure that we live within our means. Budgeting can be done by week or by month depending on how we want to plan out our money. We have to start with the fixed expenses we have, such as rent, car payments, or phone bills, and then we can move on to the variable areas within our finances, such as groceries, clothing, and entertainment, and so on, the different things that will change month to month. When we start with this aspect of budgeting in our personal finance, then we'll be able to live within our means and know how much money we have left over to put towards our savings, which is an important aspect of this also, to be able to invest and to have money saved away for later to ensure we have financial freedom later on in our lives.
About career planning, it's like a puzzle, step by step, piece by piece. There are 6 steps in career planning. First, clarify your values and interests. Second, identify one or more desired career fields. Third, review your abilities, experiences, and education. Fourth, take advantage of professional and social networking. Fifth, align yourself with tomorrow's employment trends. And sixth, finalize your career plan. We're going to take a minute and step into each of these steps. Clarify your values and interests. Understand yourself so that you can understand your values and interests. Think about the things that you desire in life, and that will help guide you into the career field that you want. Ask yourself, what standards or qualities do you find desirable? Your values have no right or wrong. They are a personal preference. My suggestion is to make a top 10 list of interests. If you plan your career with interests in mind, you will increase the likelihood of career satisfaction. Identify one or more desired career fields. Figure out what you want to do. Focus on a series of jobs that form a career ladder, beginner to higher levels of desired work. To formulate a career goal, you should think of your interests, skills, and experience. Explore the jobs, careers, and trends in the marketplace that fit your interests and skills. Think about where you want to live. Think about if you want to live in a city or the suburban life. Think about the climate, warm or cold. And if you want to be near or far from relatives. All of these things will help you identify a desired career field and where you want to be. Review your abilities and experiences and education. How do your abilities, experiences, and education match up with your career-related interests? Surveys say that the most important ability needed in career success in the 21st century is computer skills. Aptitudes are the natural abilities and talents that people possess. Are you good with numbers, public speaking? List top 10 abilities and aptitudes in your life. This will help you to figure out which career is best for you based on your abilities and experiences. Take advantage of professional and social networking. Make and use contacts such as individuals, groups, or institutions to obtain and exchange information in career planning. Use social networking sites, Facebook, LinkedIn, and Twitter. Send job referrals, and they will send them back. Maintain a continually growing list of people and take note of where your contacts work and what jobs they have. Align yourself with tomorrow's employment trends. What are the trends in employment? These days, there are many jobs in finance, insurance, healthcare, recreation, and travel. For example, my major is exercise physiology, and I would like to be a trainer. Lots of people are athletic trainers in gyms. However, thinking about employment trends now, everything is going on the internet. So I'm going to be an athletic trainer online and provide help to people in different states. Think about high demand occupations. Those tend to pay higher salaries and offer career advancement opportunities. Your academic choices should be based upon employment trends. The last step is to finalize your career plan. Your career interests and goals will change over time, especially as you continue your education, gain work experience, and see how your friends fare with their jobs and avocations. Assess yourself and your career plans every few years. What do you like and find satisfying? What do you dislike? Make career goals. We're now going to dive into different steps of how you can best find the career that suits you. First, there's education. Education is more than an investment. It's a treasure. College graduates earn twice as much per hour as high school graduates. There are also employee benefits. Employee benefits are forms of payment provided by employers to employees that result in the employee not having to pay out-of-pocket money for certain expenses such as paid vacations, health care, paid sick leave, child care, tuition reimbursement, and financial planning services. You also have the right to take leave for personal or family medical problems, pregnancy, or adoption. You're going to need an attention-getting resume. A resume is a summary record of your education, training, experience, and other qualifications. You should submit this with a job application. It should be about 1 to 2 pages in length in a PDF format so you can view it on different devices. You want to show off your skills. Use nouns and noun phrases such as Microsoft or Excel so that when they scan it, it picks it up. I like this quote. It says, "The world no longer cares about what you know. The world only cares about what you can do with what you know." Focus on your skills in your resume that are most important and relevant to the position that you want. There are different ways you can identify job opportunities. The internet has countless opportunities. There are job boards, which have different websites devoted to helping employers find suitable new employees by providing job listings, job sites, job search tips, job search engines, and related articles. Some allow postings of resumes as well. There are also career fields, different advertisements in newspapers, and employment agencies. In addition to a resume, you need an effective cover letter. This is a letter of introduction sent to a prospective employer expressing your interest in obtaining an interview. It should be written specifically for that job and position in which you apply. It should introduce and sell you and be written on a high-quality paper to a specific person requesting a brief meeting. End the letter with a sentence stating that you will be telephoning or emailing within 2 weeks to reassert your interest in the position, then call. There are different employment strategies. You first need to obtain strong reference letters. As you do this, you can put them with your resume and your cover letter. When you interview, there are certain things that you can do to interview for success. You need to be prepared. There are going to be lots of questions they ask you. Be prepared with those questions. Also be prepared to ask them questions. Have an up-to-date haircut, wear clothes in fashion, look them in the eye, and focus on the company's needs rather than your own. Do your research. As you research the company and you interview, then you will know what questions they'll ask and what things that they will offer. After your interview, There comes negotiating and accepting the job. Wait until after the job has been firmly offered to discuss salary. Ask for the salary range for the position. Focus on both the gross and net pay. Compare the salary and the cost of living. There are different websites that you can go to for this. Wait and negotiate. Be comfortable with silence and wait for a response. If the offer is less than you expect, explain, but be firm and kind what you would like. Give the employer a reply that you need a few days to rethink it over if you aren't certain that you want that job or for that pay. The last thing we're going to cover are the 4 rules of career success. As you do this, you will be successful in your career. There are 4 C words. 1 is competence, 2 is confidence, 3 is be caring, and 4, you need to actually come. As you do these 4 things, you will have success in your career and be able to find what is best for you.
This is Samantha Ditlison, and I will be discussing making a budget with your significant other and helping your child create a budget. Alright, in every relationship there's usually a nerd and a free spirit. The nerd is more of the person that enjoys living on a budget. They count every dollar. They like to have more control over their finances. They don't like to overspend, and they spend more of their money on their needs more than their wants. A free spirit is someone that doesn't really pay close attention to their checking or savings account. They just like to enjoy life, enjoy spending, go on trips without really thinking about it. They're more carefree with their spending. And they like to spend their money on fun activities. So some topics that can be discussed with your partner is just changing beneficiaries, like your life insurance policies, retirement plans, investments, 401k. You can also look at reviewing your auto and homeowners insurance coverage. Look at other options that might be cheaper. Say you're paying for Allstate, that you're paying $200, and you notice with Geico, you could cut it in half and save at least 5%. And then also you can look at your bank accounts together. Creating a joint account together would be beneficial. And then also going over each other's debt. Go over each other's like school debt or car debt, housing, everything like that. Just go over everything. Then update estate transfer plans. Go over your wills and your healthcare proxy, and decide who's going to manage the money, who's going to pay which bills, and make investment decisions. So how to talk about financial matters. First, talk about financial views. Be open with each other about what your needs and your wants are, and listen to what your spouse has to say and don't ignore it. Second, focus on what you have in common for your wants and your needs, such as a need is paying for your mortgage first, and then a want could be saving up for a romantic vacation together. And then learn how to manage financial disagreements. One thing that can be helpful is the nerd. He can create the budget after going everything you've discussed about your wants and your needs and your financial views. The nerd can create the budget of what needs to be spent where, and then the free spirit can look over the budget and see what she agrees with and what she doesn't disagree with. And then once they have come to conclusions about what they can change, then they can make the budget together again. If verbal communication is difficult, sometimes it can be helpful to write down each other's thoughts and let each other read each other's thoughts. Also, what is helpful for creating a good budget together is create a scheduled time to discuss with your spouse or your boyfriend or girlfriend, and talk with them like weekly or monthly about your budget. It's all up to you. If there is conflict discussing the budget, do not bring up other conflicts that are not involved, such as who didn't do the laundry last or clean the dishes. And then be careful with the I statements, and stay away from you statements, something that's accusatory, like it is your fault and it is not my responsibility. So now I want to discuss about teaching children about making a budget. You can start teaching your children about making a budget at a very young age. From 3 to 5 years old, you can just start discussing how much money is its value. Go over coin value with them in dollars. Also identify items that cost money, such as a toy they want. And then talk to them about how people earn money, like by working. And then teach them that it is okay to wait for something that they really want. Teach them wants versus needs. From 6 to 10 years old, you can give them an allowance. If you desire, that is up to you. Some other parents prefer to have their children earn their money. Also, you can take them shopping to help them give them choices how to spend their money. Say you give them $10 for a toy and they want 2 toys, which equals $12. You can help them choose which toy they prefer to have, or they can wait and save up more for both toys. And also, you can teach them about having a savings account. So you can teach them how to have a spending money account and also money that they can put away on the side for activities they would like to do. From 11 to 13 years old, teach them to save at least 10%. Help them set goals, such as buying a new outfit for school or buying a laptop. You can help them make these goals. And also teach them the value of hard work. If they really want something that is expensive, such as a pair of skis, you can help them earn the money, and you can also teach them how to get a babysitting job or do yard work for their neighbors, and how to save up for those pairs of skis that they would like. And teach them don't spend what they don't have. And teach them the importance of privacy and security. So make sure that they have a place where they can put away their money privately so their siblings don't get into their money. From 14 to 18, this is really crucial to teach them how to really create a budget, how to write checks, the importance of avoiding credit card debt, and how to pay taxes, what they are and how it affects job, and how to get a job. You can help them look over their resumes, help them look for good places that would be a good place to work. And when they're a young adult, you can see that these parents have set up their child that they are ready and confident to move out of their parents' house. The parents have gone over the child's credit score and taught them what it is and how to have a good credit score, save and to teach the child how to have at least 3 months expenses for emergencies, and how to balance a checkbook, and how to pay rent, and how to buy a car, and teach them also about investing, health insurance, and how much all these items cost.
Good morning, class. So today we're going to be talking about important bank institution options that we should all know and be aware of. And I'm David Mork. Thank you for coming today. So to start off, we're going to talk about a couple accounts that we can open up at banks. First off, there's checking accounts, which at the depository institution, they allow you to write checks against the deposited funds, which transfer deposited funds to other people and organizations. And on the other hand, there's savings accounts, which are accounts that hold funds where you can take advantage of the time element to earn more interest than a checking account. So over a long period of time, the savings accounts would be beneficial because of the interest attached. So important fees. There's always fees when you open up accounts at banks. So one of the big ones at checking account, for example, is that if your check bounces for insufficient funds, usually there's a charge depending on the institution and the amount of times that it bounces. The fee can be $25 to $40 or even more. With excessive withdrawals in savings accounts, there is a limited amount of times you can withdraw money from your savings account. And so if you break that limit, then there's charges from $2 to $5. Right here is a chart which kind of shows the purpose, basic types, and protections of both a checking and savings account. Big things to always keep track of, like I mentioned earlier. Over a long period of time, a savings account is very beneficial compared to checking. But from day-to-day spending, a checking account would be your option to go to. With basic types for checking, there's regular checking and shared draft, now accounts, money mutual funds. And with savings, there's statement savings, CDs, money market accounts, and both checking and savings are typically insured. So debit cards. Debit cards are used and tied to checking accounts. And so they're plastic cards that are used to make purchases. You can make the purchases immediately with a debit card. And when you make the transaction, there's always a PIN associated that you have created, or a signature that you'll have to sign off when you make the payment. This can be used to withdraw funds also from an ATM, but always be cautious when withdrawing the money, because if it's not at your ATM or your banking institution that has a contract with another bank, then you'll end up having to pay a fee. So make sure you study and look up on that. If you end up losing your debit card or it's been stolen, make sure you report it as soon as possible. If it's reported within 2 days, you're liable for up to $50. After those 2 days, you're liable for up to $500. After 60, that's it for you. I mean, you're not covered for anything. So all the money that the person that stole your card, they can take all your money. Also, it's the same situation. If someone knows your PIN, then they can steal your card and you're not protected at all. So, credit. Credit is an arrangement in which goods, services, or money is received in exchange for a promise to repay at a future date. And with credit, that's basically taking out a loan, which is consumer credit that is repaid in equal amounts over a set period of time. And so when you're using credit, it is money that you don't have that you're borrowing from the bank. And so there's good sides and bad sides. You can, as you're borrowing the money and you're making your payments, you'll build for yourself good credit, which in exchange, the interest rates on the credit will lower and you'll have better opportunities. On the left, there's a credit pyramid, and towards the bottom are offers for bad credit, and they're just high interest rates. In the end, they're more expensive. Like payday loans, those are things to avoid. Up at the top, as you get higher up, these are less expensive, and they offer lower interest rates. And you can get them when you have good credit. And so make sure as you're getting older and you have these opportunities, build for yourself good credit, because they also offer great benefits when emergencies happen, protection against fraud, convenience. The downside of credit include temptation to spend more money because there's money readily available. But in the end, it's not your money, it's money you're borrowing. And so when you're not making those payments, you can have over-indebtedness. The interest is very costly, and so you need to make sure that you're making those payments on time. It also reduces your financial flexibility because you have to make those payments. So credit cards, these are plastic cards just like a debit card, and they allow repeated use of credit as long as the consumer makes regular monthly payments. These also sometimes have annual fees, and so make sure you know what you're getting yourself into when you agree to contract when using a credit card. So if your credit card is stolen or lost, it's the same thing, report it as soon as possible. If it's reported within 2 days, you're liable for nothing. But after 2 days, you're going to be liable for $50. Most companies will waive this fee because they do want you as a customer for themselves. They want to keep having you use their service. Now, late payment is limited to no less than $25. Interest rates can vary from 14 to 26%. Make sure that you really study up and look into this, because you want the lowest interest rate possible for yourself. Credit statements. Over here to the left, we have a sample credit card statement. And so this kind of gives you a visual what we're going to talk about here. So on credit statements, there's a statement date, which is the last day of the month for which any transaction are reported on the statement. Payment due date is the date the credit card company should receive your payment. So make sure that you're aware of that so that you can make your payment by that date. Transaction date is the date you make a transaction. Every time that you're making a transaction, it'll be put up on your credit card statement. There is a grace period, which is a time between transaction date and due date, where you avoid finance charges. They're only offered in the previous month's balance was fully paid.
Hi again. So I'm here to talk to you about income tax now. Now, income tax is the tax on the money that you earn. There are two different types of income tax. On one hand, there's the federal tax, and on one hand, there's the state's tax. So the state income taxes varies by state and is often very different. However, the federal income tax is broken into 7 different tax brackets. Now, in each tax bracket, it has a different percentage that you pay. If you make lower income, below $9,000, you'll be paying 10% on your income. If you make a little bit higher, up until $36,000, you'll be paying 15%. Now, you are taxed on the last dollar earned. And what that means is, let's say I made $25,000 this year. That's not too bad. The first $9,000 is going to be taxed at a rate of 10%. That means I still have $16,000 left. That rest of that money is going to be taxed at a rate of 15%. And so the idea that we want you to understand with income tax is how you can legally lower the amount of tax that you have to pay to the government.
Hello, my name is Mark Helms, and I'm here to go over the 3 most common ways people reduce the amount they pay in taxes. So those 3 ways are exemptions, exclusions, and adjustments. So exemptions are dependents, or people that you care for that can be either a child, a spouse, or an elderly parent. And so you can even claim yourself. But you need to know that you cannot claim yourself if a parent is claiming you. So you need to talk with them and decide what is best financially. Second, exemptions. Exemptions are they're sources of income that the government cannot tax. And so that includes scholarships, gifts, inheritance, or many other things like that. Third, adjustments. Adjustments are allowable subtractions from your total income. There are 2 ways to do adjustments. There is the standard deduction and the itemized deduction. So the standard deduction is a set amount that the government will let taxpayers deduct. It's just a standard set fee. It's the itemized deduction is it's allowed expenses that you can deduct from your income. So those could be medical expenses, paying into a retirement fund, or gifts to charity. And so you need to know that you can only choose one or the other. So you need to find out what is best for you financially and choose that one.